If you are busy working full-time or part-time, if you're a student busy with your studies or other activities, if you're a busy homemaker, or if you're busy with your regular day-to-day business, and if you're interested in participating in the stock market without losing sleep at night, this video is for you. If you have a small account, or if you want to contribute a smaller amount every week, every month, and if you want to grow your investment and put everything on an autopilot, this video is for you. No more spending hours and hours on computer or on mobile phone researching for the best stock. What I'm going to show you today has an impressive track record, including surviving the COVID pandemic. Hello, welcome back. My name is David Das. I'm a retired engineer, an investor, an author, and a YouTuber. My main mission is to educate younger generation about savings and investing based on my limited knowledge and experience. If you find this video useful, please like and share. It encourages me to make more videos like this. If you have not subscribed to my channel yet, please do so and press the bell icon so you do not miss my future videos. Before I proceed further, I just want to give a big shout out to one of our viewers, Passions here, who actually commented in one of my previous video to make a video for a long-term investing in an ETF. So thank you very much for your valuable suggestion. Would you like to see your investment grow like this? If you have invested $100 in September of 2010, the value of it would have been $475 in April 2024. Today we are going to talk exclusively about S&P 500 index and ETF, which is exchange traded funds. S&P 500 index is perhaps the world's most well-known stock index. The index contains about 500 of the largest publicly traded companies in the US. It includes stocks across all 11 sectors of the economy. Exchange traded funds, or ETFs, are a basket of stocks. It has a piece of each of the stocks involved in that index. So basically, you're not depending on one company. If one company does not perform well, the price of the ETF does not fall that much. ETFs give you an efficient way to diversify your portfolio without having to select individual stocks. If you look at 30 years of data of S&P 500 index, it has rallied 3,100% during this period, in spite of many tough times like the COVID pandemic. So if you believe in the US stock market, this is a good place to start. But you cannot buy the S&P 500 index directly. So either you have to buy exchange traded fund or a mutual fund. Mutual funds are generally more expensive than the exchange traded funds. So we are going to talk about the ETFs, or exchange traded funds. There are two popular ETFs for S&P 500 index, SPY and VOO, VOO. But according to Morningstar, VOO has a better rating, as you can see on the screen. In addition to that, VOO has a lower management expense ratio. The goal of this ETF, which is the VOO, Vanguard S&P 500 ETF, is to track the performance of the bigger index, S&P 500. If you look on the screen, the VOO has a 5-star rating on Morningstar. It has a management expense ratio of 0.03%, and it has a trailing 12-month yield of 1.33%. This chart indicates the growth of the ETF VOO over the last 10-year period. Say it mimics the index, and it has grown from $10,000 to about $34,000 in 10 years' time. The top holdings of this ETF includes the big names such as Microsoft, Apple, Amazon, Google, which is Alphabet, Facebook, which is Meta, and Berkshire Hathaway. The average 10-year return for this ETF is 12.82%, as you can see on the screen. So if you want to get started, open a brokerage account and say initial investment is $300 and you want to contribute weekly $75 over a period of 30 years at the rate of 12% growth. Your value of the portfolio will be over $1 million during this period. I will provide a link of this calculator in the description box below so you can play with the numbers and see what numbers you are comfortable with. But there are two important things when you open a brokerage account. Make sure your brokerage platform of that company offers fractional shares, and also it's something called recurring investment. So you will be able to buy on a schedule. The benefits of the fractional share is that if the price of the ETF is, say, for example, $450, and you want to contribute $45 every week, so you should be able to buy zero point 0.1 VU per week. And the brokerage platform will take that $45 from your checking or savings account every week and buy that zero point 0.1 VU every week on your particular schedule. Make sure these two features are available. That will put your investment on an autopilot. And there'll be so much less hassle that you don't have to deal with all the transaction and buying and selling. It's all done on an autopilot. It's such a remarkable feature, and I'm sure you will like it. Do not get excited by looking at the price of VU or SPY. If you have the fractional share option with your brokerage account, that will solve the problem. But if you don't, I will give you few low-cost ETFs that will also track the S&P 500 index. And for my Canadian friends who want to do everything on Canadian dollars, I have few ETFs which are also tracking the S&P 500 index. Now I will list 7 most popular ETFs tracking the S&P 500 index in US dollars. There will be 4 which are traded in the US exchange and 3 in the Toronto exchange. And after that, I will talk about 8 ETFs which are traded in Canadian dollars in Canadian exchanges. One thing I have noticed, and you should be aware of, that the ETFs which are hedged to Canadian dollars have performed poorly than the ones without being hedged. That's the end of my video. I hope you found this information useful. Thank you for watching, and I will see you next time.